Okay, I'm going to show you a brief real-time demo of what it looks like to do market conditions in my custom Excel workbook. So I'm in the MLS right now. I've put in a search. I've got 3 years worth of data here. I have excluded a little spot that I didn't want. I could decide if I wanted to exclude any other places if I wanted to. Once I'm happy with that, I'm going to export that into a custom export, and then I'm going to open that up. Okay, here is my custom export. So I'm going to copy the data from that, and I'm going to paste it into my workbook. I want to clean the data a little bit, especially I'm looking for seller concessions here that aren't correct. There's oftentimes realtors will accidentally put the entire sales price as the concession. That is not credible, so I'm just going to remove that data point. Here is now my smooth data point. I have sorted it oldest to newest. That's very important. What else is happening on this screen is a model for pools. I have homes with and without pools in this data set, and so I'm normalizing between them. And that model is actually going to change as I put in modeling factors here. On this screen, I'm going to start entering subject data. So my subject is 2, 1.5 with a lot size of 8,000 feet, and it has 2910 square feet, and it was built in 2005. Okay, now I'm taking off my smoothing factor there. So now we're seeing all the unsmoothed raw data points that have only been modeled at this point for pools. And that model is actually connected to this one, so even that model is going to shift as I put in factors. So what I'm trying to do now is isolate the impact of time and adjust for factors that would explain differences in price between data points that are not related to time. Obviously, the big one is square footage, but there's other things I can have modeled for here. And I'm looking to minimize my standard deviation. I won't always have this. It just depends on how many data points I have. If there are any gaps, then those calculations won't appear. But as I put in adjustment factors, you're going to see the model's going to, all those modeling factors are going to bring the data points closer and closer together. So I'm modeling for a lot of these, and now that I've done that, you can see my data points are much closer together, and so that's going to help me to isolate the variable of time. Did I fully isolate that variable? Nope. There's still other things, quality, condition, different amenities that I haven't been able to adjust for. I'm putting in a modeling or a smoothing factor rather, and now you can see the red points are the data points that have been modeled. Now they've been smoothed, and you can see much more consistent trend. Now you can definitely see the market go up and down and then up, and then it sort of gets a little bit more erratic. In here you can see that there's a lower concentration of data points and a higher dispersion. There's just not as much going on as there was, and the less data you have, the more variation you're going to have from time period to time period. That's important when I move to the next tab and interpret. So this screen gives me all the information that I need to actually make an interpretation of what I think is actually happening. This graph, where I am right now, where I define my current market, is always going to be on the 100 line. And so you can kind of see the market shift off of that line, depending on where I think I am in this moment. So as I change this current score, that's that modeled and smoothed per unit price is how you can think of that. It is going to be something that I might change depending on how I'm interpreting my most recent data points. And I can see here that my most recent data points are skewed a little high because there's not very many of them, and they're really all above the line. So this long-term trend line I have in there just to help me visually to separate how things are changing. Are we going sort of above or below that long-term trend at any given moment? My most recent data points skewed a little high. There's really not any of the lower price segment in the most recent month, which I think is skewing my score. So my score does get it smoothed a little extra on this screen. So the lack of any additional smoothing here would say my score would be 215. I've got some additional smoothing here, bringing it down to 211. Might it even be a little bit lower based on where things have been and my interpretation of where things have been? I think it's close to where it should be. So here I do have what appears to be maybe a little dip in this time frame. I might go and look and see that dip. Is there anything maybe compositional there? I do have a little bit of a gap in data points at that. So it's probably a compositional shift during that time and not real market change. I can look down in this chart here. It has days on market and sale list ratios. I can look and see if there was maybe anything that really shifted, during that time frame, and it's really inconclusive that there wasn't really a trend I can discern at that moment that would have just really resulted in this dip. So I think it's compositional shift. So if that's my conclusion, then I can look at this and draw the conclusion that my market's been relatively stable, really, for more than a year in this market. And then before that, it seemed to be a little bit higher. So earlier on in 2023, probably won't have any sales back that far, so I won't have to worry about that. So I can look at the actual calculations from month to month. Here's my smoothed, what would be the adjustment factors based on the index point month to month. And then I can see what the variability is and decide, okay, this variability is going to tell me kind of what's the normal fluctuation from one month to another that's not really going to be primarily composed of time change. It's just compositional shift changes. And I can see like most of these data points are well within that. The only one that's just a little bit odd is this one right here, which I've already taken some time to think over. Was there actually anything that happened during that time frame that really shifted the market down and then back up? No, I don't really think that fits with any of my other data. So in this case, I actually have a conclusion that for the past year, I don't actually have any significant time change. So that's my conclusion from this data, and I can take this chart and I can copy it and paste it into my report. And so that's just a real quick snapshot of what it looks like, sort of real time. Was talking through it, but to grab the data, plot it, filter it, model it. I'm getting some other information. I didn't really go back and look at my active listings. That would tell me how much supply I have relative to my annualized rate of absorption. I can tell you from that amount of data that that there's not a lot of supply. I just looked at it, and it's 42 days of supply right now. Not a lot, which also tends to make me think that um, that the market uh, might be actually uh, going up potentially as I move into the future. Might I expect with I did have a few high data points that looked like compositional shift, but I don't have a lot of inventory right now. So might I be on the lookout in that market for are things actually going to start trending up? I'm gonna keep an eye on that. And looking at my most recent sales and my listings and pendings are also going to help me to uh, to decide where I think I'm at. But my as I sit right now, I haven't selected comps yet or done anything, but my frame that I'm going to be putting around this data from the get-go said it looks like a stable market that I probably won't have any time adjustments to apply in this particular case. So yeah, just wanted to give you guys a quick preview.